Hi everyone, this is 𝐒𝐔𝐁𝐄𝐑𝐈𝐿 of Ali Talks Tech. We're back after a 2-week break, taking a break from recovering from the Africa FinTech Festival, which I was intimately involved in. Of course, last week, the Gen Z demonstrations in Nairobi, my home city. We are back today, and we are going to be covering a couple of interesting stories. First, we go all the way to Nigeria, where the CBN, that's the Central Bank of Nigeria Governor, in a speech warns of fintech risk to financial stability in West Africa. And as I cover this story in a couple of minutes, I want to change the tonality of the governor's speech, and I'll talk a little bit more about that. BlackRock bolsters data capabilities with a $3.2 billion acquisition of Preqin. Preqin is what is known as an alternative data cruncher. We'll cover that. We then come to my home country in Kenya, where the Central Bank of Kenya approves WapiPay's partnership with Nala Payments. I will also cover a bit on what went on at the Africa FinTech Festival. We then move all the way to South Africa, where South Africa has surprised all of us as it embraces crypto with a record 63 new crypto licenses approved in one press release. Then we move to Kenya again, where NCBA Bank expands its footprint in insurance with the full acquisition of 100% of AIG Kenya, which is a local insurance company based in Nairobi. Then we move back to South Africa, where we cover Timebank closure of $77.8 million in funding. That is quite interesting. So back to Nigeria, where I will delve a little bit more into the Central Bank of Nigeria's governor's speech around fintech risk to financial stability in West Africa. The governor made a speech a couple of days ago where he talked about the immense risk of fintech to financial stability in West Africa. I would love to twist this a little bit and talk about this as a glass half full as opposed to a glass half empty. Tonality is super important. So, if I were the governor, this is what I would say. Navigating the fintech revolution, balancing innovation and stability. The rapid growth of fintech has undoubtedly transformed financial services, not just in West Africa, but across Africa. While this innovation has expanded access to credit, streamlined payments, and driven economic progress, it has also introduced new risks that regulators must address. As the Central Bank of Nigeria governor, that's something that is super important for him to really take a look at. However, of course, the increased transaction volumes of non-bank financial institutions, read fintechs, and other financial institutions pose a potential threat to financial system stability. That volatility, that increase in volumes, obviously may pose systemic risk. This is a valid concern that must be tackled proactively. However, the solution is to encourage fintech innovation. Instead, it is to develop robust regulatory frameworks that foster compliance with international standards and mitigate systemic risk. This frameworks would include, number one, strengthening anti-money laundering practices. 2, enhancing supervisory capacity on cybersecurity and fintech regulation. 3, implementing risk-based supervisory approaches. By striking the right balance between innovation and stability, we can harness the transformative power of fintech while ensuring the financial sector's resilience. This will be crucial as the non-bank financial industry sector continues to grow in influence and importance across the Western Africa region and Africa in general. The path forward requires collaboration between regulators, fintech firms, and traditional financial institutions. Together, we can navigate this digital revolution and unlock new frontiers of financial inclusion and economic prosperity. We now move to BlackRock and its acquisition of Preqin. BlackRock, the global asset management giant, has acquired Preqin in a strategic move to enhance its data and analytics offering. Asset management giant has acquired Preqin, which is a leading provider of data and intelligence for the alternative assets industry. The total value of the acquisition, $3.2 billion. This deal underscores BlackRock's commitment to staying at the forefront of evolving investment landscape. By integrating Preqin's extensive data sets and research capabilities, BlackRock aims to provide its clients with deeper insights, more sophisticated risk management, and better informed investment decisions. This combination of BlackRock's scale and Preqin's specialized expertise is poised to create significant value for the alternative assets space, which continues to grow in importance for institutional and individual investors alike. Interesting times. We're now looking at central bank's approval of WapiPay's partnership with Nala Payments. WapiPay is demonstrating, first, let's step back a bit. WapiPay is fintech focused on cross-border money transfer from Africa, focused mostly from Africa into Asia and back. They're demonstrating an interesting go-to remittance partner capability. Their latest partner, Nala Payments, which is a Tanzanian fintech, received the Central Bank of Kenya's approval to terminate inbound and outbound remittances. This partnership showcases WapiPay's position as the trusted choice for remittance rails, backed by its compliance with the Central Bank of Kenya and unwavering commitment to operational excellence. It's an exciting journey as they unlock the vast potential in remittances in African markets. A personal congratulations to Paul Moore-Ndishu and Edwin Ndishu, the founders, who happen to also be brothers. Now, I'd like to step back a bit and talk a bit about the Africa FinTech Festival that happened last month on the 12th to the 15th of June at the NHPI Resort in Naivasha. The Africa FinTech Festival is the brainchild and key event of the Africa FinTech Network, which is a Pan-African umbrella organization of 40-plus national fintech associations. This year, the festival was hosted by the Association of Fintechs in Kenya. We saw participants from across the world. 28-plus countries were represented. Conversations around fintech, regulation, green tech happened. It was a fantastic event, if I may say so myself, and the Africa FinTech Network is looking forward to the same event next year in South Africa, in Johannesburg, South Africa. A special thank you to all our sponsors and partners and speakers and ecosystem partners. A special thanks to the leadership of Monyindiga, our festival director, and to the team that was working with him, Belva Digital and CIO Africa through DX5. We now move to South Africa, where South Africa seems to be the country in Africa that is mostly embracing crypto with 4 hands, not even 2. They have taken a significant step forward in embracing the crypto revolution, with its financial regulator approving 63 new crypto licenses this week alone. This landmark move signals South Africa's commitment to fostering innovation and providing a regulatory framework for the burgeoning crypto industry. The country is paving the way for increased crypto adoption, investment, and entrepreneurship by granting these licenses. As one of the first African nations to establish a comprehensive regulatory regime, South Africa is positioning itself as a hub for digital asset innovation in Africa. This development will definitely attract global crypto players and empower local entrepreneurs to build the next generation of blockchain-powered solutions. The approval of 63 new crypto licenses is a testament to South Africa's progressive approach to financial technology. It demonstrates the government's willingness to embrace the transformative potential of cryptocurrencies and blockchain while ensuring appropriate safeguards are in place. Exciting times for the crypto ecosystem, not just in South Africa, but across Africa. As the industry evolves, the country's forward-thinking regulatory and policy stance will undoubtedly attract increased investment and drive further growth in this rapidly transforming space. Back in my home country, NCBA Group, one of the tier 1 leading banks in Kenya, has acquired 100% shareholding of AIG Africa, an insurance company. This deal marks an important milestone for the bank, which is looking to leverage AIG's expertise and customer base to enhance its insurance and bancassurance offerings. By integrating AIG's operations, NCBA aims to provide its clients with a more comprehensive suite of financial solutions. This acquisition aligns with NCBA's broader growth strategy as the bank continues diversifying its product portfolio and cementing its position as a leading player in Kenya's dynamic financial landscape. We are back in South Africa, where Timebank, one of the leading fintech challenger banks, neobanks, has closed a 77.8 million funding from 2 major VCs, 𝐒𝐔𝐁22 and Blue Earth Capital. Timebank's origin story is marked by its innovative approach to digital banking in South Africa. It was the first bank in the region to place its core banking platform in the cloud, leveraging technology for scalability, security, and cost efficiency. This strategic move, coupled with partnerships with retailers like Pick n Pay and Boxer Stores, has positioned Timebank as a leader in the challenger bank market, disrupting traditional banking with a digital-first model. As a leading digital bank, they have made some superb strides. Key highlights of Timebank: they have over 7 million customers in South Africa and is growing at a 300,000 new customers clip per month. The company reported a revenue run rate of $100 million annually across its South African and Philippine operations. Challenger banks like Timebank are disrupting traditional banking in Africa. The continent's challenger bank market is expected to reach $30 billion by 2025, growing at a compounded annual growth rate of 20%. South Africa is a leader in this space, with Timebank, Bank Zero, and Lula among the prominent players. Old Mutual Limited was also recently granted a banking license by the Prudential Authority, and it is expected to be a digital-first bank. This latest funding will allow Timebank to expand further in South Africa and the Philippines and explore opportunities in Southeast Asia. The company's innovative digital banking model and rapid growth demonstrates the immense potential of challenger banks in emerging markets. Let me just step back and just reflect around how South African companies don't shy away from expansion outside South Africa. Let's talk about Timebank first. Let's talk about Old Mutual with operations outside Africa. Let's talk about MTN, whose operations go beyond South Africa into Iraq and Iran. Let's talk about Process, which has become one of the leading consumer internet investors across the world, with now operations in Europe, Asia, and Eastern Europe. With that, ladies and gentlemen, I will sign off today, and I look forward to catching up with you guys next week. Thank you very much.